Hi everyone, it's Randall Orser with Number Crunchers with part 2 of our 18 tips to a smooth audit. So tip number 7 is bank reconciliation. This is done by comparing your bank record to your bank statement and matching up all your checks, withdrawals, and deposits. You need to do this monthly. The reason for doing that is to catch mistakes that maybe the bank has made, such as missing deposits. I've had that happen to clients before, and at least if we catch it monthly, we catch it before the 30 days, which is all they give you to catch mistakes. So that way you can catch things faster if you do it monthly. Tip number 8 is make detailed deposit slips. So on your deposit slip include the customer name, the check number, and the invoices being paid, and of course keep a copy for yourself. Now if you're using the ATM, that's fine, but make sure you on the back of it that you write out who it was, the invoice number, and the amount being paid, because your bookkeeper's not going to know what that amount is for, and you won't remember necessarily even a month later when they come in to do your books. So tip number 9 is make a schedule or a list of things to be done each month. So when is your GST due, your PST, workers' comp, payroll remittance, all those government remittances, when are they due? Keep track of that. Of course, hopefully your bookkeeper is doing that too. Also keep track of other payments that are coming out of your bank account or that you need to make every month that are made on a regular basis, such as bank loans, car loans, and stuff like that. So tip number 10 is tracking auto mileage for business. Now, a logbook is essential if your car is being used for business and personal. You have to have a logbook. The first thing a CRA is going to come in and do is ask for a logbook. And of course, you have to keep that. Whether the company owns a vehicle or you own the vehicle personally, you have to do a logbook. Now, the advantage if you're a corporation is that you can actually pay yourself mileage, so you don't have to keep receipts and all that lovely stuff. You just pay yourself, keep track of your mileage every month that was for business, and pay yourself accordingly. So tip number 11 is if you're using another program to create your invoices, such as Word or Excel, remember you need to keep a manual invoicing numbering system. So what is that? You need to keep consecutive invoice numbers. So 1, 2, 3, 4, etc. like that. If one is void, save it as number 4, void. At least that way you know, okay, I didn't use that number, it was a void. Also, better yet, instead of doing that, is use an online invoicing system. There's a few free ones. Billingboss.com is a good one. You can do all your invoicing through that. Works great. So tip number 12 is review accounts receivable at your year end to determine those that aren't going to be collectible, so they're pretty much have gone bad. And that way, get them off the books, write them off right away. Also, you have to prove that they're not collectible. So you've attempted either through mailing statements or phone calls or emails, just to keep track and so that you can say, okay, that's not collectible, and show proof. Thanks for watching part 2 of our video series. This is Randall Orser with Number Crunchers, relieving your paperwork nightmare.